Happy Monday to you. We welcome you to Trading with Technical Indicators. My name is James Boyd, and we also have Ben Watson with us in the chat, so we welcome him. And it's also the Ben Watson, not just Ben Watson. My gosh. Josh, how are you doing? Rich, how you doing? Bharat, Elena, Sandy, Maximus, Jessica, WW. There was a question regarding the green shirt. I framed the green shirt in my upstairs office, and I dry cleaned it and everything and pressed it. And I wrote new high on the top. So just kind of have a little fun there. So I might have to get a new one. Now, just real quick, we welcome you, Andrew, and High Speed and many others. This is not a one-off class. We meet every week. This class is also recorded. So feel free to watch it again as well and share it. Now, just real quick, as we get started, Ben and myself and all of us instructors, we do post on X. There's my handle at the bottom left-hand side. We do post educational examples and also announcements there. My handle is at James Boyd CS. If you're not on X, it's a way that investors really talk to each other and just kind of share information, okay? And it's similar to Facebook where you kind of follow who you want to follow, okay, like a news, if you will, and it comes through your stream. X is very interesting because it is nice that people in the industry share information that's public. Now, just real quick as we get started here, so if you're not on X, check it out. Interesting tool. Now remember, with what we discuss here today, it's done for general informational purposes only. Should not be considered an individualized recommendation. Also remember that options, when we talk about those, we'll talk about stocks and options. Remember that options carry a high level of risk and are not suitable for all investors. When we talk about examples, we will do those in the Paper Money software application. My suggestion to you is you should be at least paper trading 2 to 3 times a week to really become proficient, okay? And if you said, James, I want to learn faster, probably 4 to 5 paper trades a week. Hard to really kind of learn to play the piano if you're only doing it 1 time a week, 30-minute increment, okay? So we're trying to speed up the process. And also remember that investing involves risk, including loss of principal. Now, today, what I want to really talk about is scripts on the price graph versus, let's say, an oscillator like the MACD, RSI, stochastics, things like that. I sometimes think that people think the smoking gun, if you will, is the oscillator, but I actually think they think like that, if they do, because they're not really understanding the script that's on the chart. So today, what we want to really do is emphasize the script on the chart on what it's showing us, and really kind of talking about how is it different than any of the oscillators at the bottom. I mean, are the oscillators really to be considered, or are you misunderstanding of what the script is showing you on top? Now, I'm prepared to talk about that here today, and I want you to actually go out and review it for yourself. And it's something, a process that I went through, and I said, wow, if someone learns how to read what's on the price graph, you could almost draw the oscillator yourself, okay? Now, let's take a quick look at, I'm going to pull up just briefly, and I'm going to kind of leave some of those oscillators on the bottom. We'll take a look at those in just a moment. So if we looked at, let's say, I'll just start with the S&P 500. If we look at the S&P 500, we had an intraday high in the morning on Friday, faded back, okay, and left us sitting right near the moving averages. Still green, okay? If we look at today's price action, up about barely 0.2%, slightly positive, but we're kind of still sitting right near this resistance area, if you will. I mean, you might kind of say that it, did it break out? If we're talking about our definition of a breakout, it didn't break out, but it made an intraday high. We define breakout as we want to see the whole body of the candle above the resistance line, and we want to see the color of the candle green, meaning that it closed higher than where it opened. So those 2 requirements. Friday did not meet that. However, it did actually make an intraday high. That's a start. So if we take a look at, let's say, the NASDAQ, you pull that up, did this meet the breakout criteria? Well, per what we said, the body of the candle was above the resistance. That is true, okay, the diagonal line, but it wasn't a green candle. So it's not really the breakout that we would be saying that meets the criteria, but it closed above the line. I mean, that's good, but it's just not meeting that breakout criteria. Now, does that mean that all NASDAQ stocks are not breakouts? Well, of course, that's not true, okay? So the NASDAQ met criteria number one, missed criteria number two. We did actually have an intraday low right near the moving averages with a pretty long shadow, okay? And then today we actually are up about 0.5% or so. So look, fairly decent move on the NASDAQ considering it was one of the weaker ones. The Russell, if you take a look at that, has kind of been riding the top end of the channel. We said last week, diagonal and channel was the words of the week. And you're going to kind of notice if we kind of take this channel going forward, the smaller caps, kind of in the middle to the top half of the channel. Smaller caps still getting a push. Dow Jones, just real quick, we're actually seeing it's kind of has not met the breakout criteria. So you'd really say the NASDAQ might be the strongest with the small caps, okay? And the Dow has two red lines on the moving averages, okay? And that short, if we zoom in on this on the Dow Jones, there's kind of still been that lingering effect of the 10-period moving average has been red. And what does that tell us? Well, if the 10-period moving average is red, it means momentum is slowing. It's stalling at the minimum. The slowing or pulling back, all the above. And you're going to kind of see since last week, it's kind of just been up and down, not really big up or big down. It's kind of creating that range. Now, biggest thing that we care about is, can it really hold this support level? And so far it has, okay? And sometimes those support levels take time. I know it's painful. I'm as impatient as you are, okay? I have no clue why I have 4 kids, okay? It's made me become a little bit more patient over time. Now, here's the big deal. So when we look at the VIX, one thing we want to kind of make mention is we don't see that when you look at the VIX, luckily it's below the moving averages. Continue that, please, many bullish investors might say. I think also they're kind of the real takeaway here, some other things. The US dollar, okay, has really been on the deck or the floor, if you will, and it's maybe even showing signs of breaking down through the floor. Now, is this a descending triangle? You know, I'm not going to get a level out and see if the bubble slopes to one side. But if you really take a look at that, many people that look at, let's say, other type of products like currency might say, look, I might be bearish the US dollar, long the Swiss franc, long the pound, long the euro, thinking that actually that US dollar might decline. Now, if they say I don't trade currencies, they might say I'm going to be bearish the US dollar and actually be thinking I'm going to be going large caps, okay? Companies that sell abroad, et cetera, not just here. The other things they might consider is they might say, look, I think the US dollar might go down. And some investors might say, look, I'm just going to go long if the dollar is going to continue to be weak. One way to try to play that weakness, okay, is gold, which still hit a brand new high here today. You actually take a look at, let's say, silver. It's not just gold, it's silver as well. Now, if you have any gold and silver jewelry, you might have been updating your balance sheet on the fair market values of those products. Good for you. Now, the one thing I do want to make mention of, when we look at the TNX CGI, this was the theme that we talked about last Wednesday. We said, hey, I mean, this kind of looks somewhat, this is looking at the interest rate for the 10-year maturity. The rate broke down last week. Okay, it was Thursday that broke down. There's Thursday, there's Friday, there's Monday. And again, kind of going back to that home builder theme. I'm not going to talk about that a ton because it's a continuation of what we already talked about. No real changes there, but I want to kind of bring this out. Kevin and I talked about ETFs on Friday, right? We talked about some investors like to look for, let's say, something that might correlate inversely. If the rates decline, could something go up? That's what the home builder discussion is. Now, we could also kind of bring up there's products that actually, if the rate goes down, the prices go up. You might kind of keep an eye on those because those are probably been going up in the last 3 days. And that's kind of more of a pretty basic understanding, okay? But that's something to continue to watch. Now, if we're talking about, let's say, sectors, okay, let me say one thing. Now, we know that investing is not just US based. The two areas that some investors are probably watching today are number one, Japan, okay? And the second area is China, okay? Those two areas, Japan and China, are probably the strongest we see if we're talking about countries, okay? So that's an area to kind of keep an eye on. Now, I want to kind of just briefly, when we take a look at, let's say, technology, getting a little bounce back, if we bring up, let's say, what does semis look like? Semis kind of, after kind of being on its back a little bit, we'll bring up NVIDIA in just a sec because it was a question, and I do want to talk about that. It's swung back to the upside. Now, it's not NVIDIA that's actually been leading that charge. Let's be honest. In NVIDIA, on Friday, it actually made a lower low. If we looked at NVIDIA and said, do you see the bullish entry? We would say, no, I actually don't see the bullish entry. If we're looking at moving averages to be green or a crossover in general, no, we do not see it, okay? Now, if I came back to this chart and said, do we see that we're at a horizontal support? Paper thin support, but I don't really see a whole lot of support. So when we look at NVIDIA, while some people might say it's a good company, technically it's still, well, and again, if we're using a proxy as the 10-period moving average, being a gauge of momentum, again, just being yes or no, we would say no, it does not have bullish momentum. The moving average is red. If we look to the gauge of the 20-period moving average being a gauge for trend, and is it bullish, we would say red is showing currently no. Now, that doesn't mean that tomorrow, Monday, Wednesday, etc., but right at this moment, still weak. It's now, what's hard is sometimes we lock onto certain names, and then we're not taking a look at some of the neighborhood stocks that might be causing the semiconductors to go up. Micron kind of doing a little opposite to what NVIDIA is doing. Now, am I missing any other semiconductor stocks? Speak now or forever hold your peace. Okay, anybody. Okay, now so I think the biggest kind of takeaway from technology is semis are a little bit better, but it's not being led by NVIDIA. Keep an eye on Micron. Now, obviously, if we're going to get, let's say, a push, many investors would like to see the communication sector maybe up there as well, hit another brand new high here today. And obviously, when you take a look at, let's say, the IXY sector, you're going to see that hit a high on Friday. The moving averages, they're already green, kind of getting pretty close to a cross. Now, in our discussion here today, I want to kind of talk about looking at the graph, which is the biggest part of this real estate of my screen, and then looking down here at oscillators. Now, I remember, Ben, you probably remember this. I remember going to a friend of mine's screen in the office, and he said, James, man, you got to take a look at this stock. This stock is unbelievable. I've been watching it for a while. He had so many oscillators on the bottom of the screen that the price graph was like this, okay? And I just left his desk that day just thinking to myself, how could someone trade or invest when the price graph was almost the smallest thing on the screen? And what are these oscillators telling me that is so dramatically different? And is there any statistical differences, numbers-wise, if you traded them, okay, versus just using the price graph by itself with the scripts like the moving averages and the Cajal dots? I want to see statistical data. So I'm not going to try to sell you on the indicator of the week program. I'm not going to do that. What I am going to kind of say is the biggest thing is I want to talk about the price graph and why we keep hammering that with a 10-pound hammer. Okay. Now, what I'm going to do is in our first example, if you don't mind, I'm going to come back to, let's say, just a chart real quick, and I'm going to kind of move these down. Now, as we talk about these, I'm going to bring up the price graph first. And I'm going to kind of talk about, now I think of the price graph, okay, like the windshield, okay? And the oscillators down below are like the side mirror and or rear view mirrors. Now, I don't know about you, but when I drive, I'm looking at the windshield, okay? Now, so when we look at this, one of the stocks we talked about last week was Amazon. And we kind of made some comments last week, and I made a video on X talking about the Cajal dots, okay? And what you're now going to notice is if we look at these little dots, we mentioned if these dots are really getting higher over time, that's really telling us something about the shorter term, intermediate, longer term trends. Now, it doesn't matter. We could do this on the intraday chart, daily chart, weekly chart, monthly chart. It is not just focused only on stocks specifically. It's not, okay? Now, if we look at this chart, I want to kind of zoom in back to what we saw here. What was it on Friday? No, Thursday. Now, remember, the foundational concept, teaching, practice, is that some technicians, they want to see the moving averages green, okay? Where the momentum is to their back at that moment in time and the trend. Now, with that, you like to at least think that maybe the moving average was the 10 period was above that 20 period as well, hence a moving average crossover. So there's a little Cajole dot. Now on Friday, when we actually pulled this up on Friday, we kind of commented Amazon was down. That doesn't necessarily mean it's bearish. It could just be kind of a little slight pullback, and it pulled back. The key word is so far. That pullback, red candle, was still above what? Well, still above the moving averages. Now, about 2-3 weeks ago, we really hammered that concept of if you get scared every time there's a red candle after a high, man, you're like getting fearful when the stock might be really making the higher low / bounce setup. Okay, I mean, maybe some investors get scared at the wrong time. Now, what you're going to notice is if someone got scared and said Amazon is not trending anymore, we go back to kind of where it is today and say, wow, the stock gapped to the upside. And by the way, that kind of goes back to some investors might be looking to buy on that red candle, provided that it's above the moving averages and or support. Now, today, why is there a green dot? There's a green dot showing that this is trading above the high of the low day. And how do we define the low day? Does anybody know? How do we define the low day? Simple answer. We define the low day as the most recent, lowest red candle, okay? So when we talk about the low day equals the most recent, lowest red candle. And I'm going to capitalize that red candle, okay? Most recent, lowest red candle. So low day equals most recent, lowest red candle. Now, James, if there was only one red candle recently, then it's going to be an easy to identify where is that trade above the high of the low day or close above the high of the low day. So if we trade above the high of the low day, that is why that green dot is there. Okay, now in this example, the reason why I want to point this up, we know that not everyone is, in this case, they don't trade 2 to 3 days to 2 to 3 weeks. Let's just be honest, right? Some people trade, James, I'm looking for something that could hold for weeks to months, et cetera, et cetera. Well, one of the things I want to kind of bring up is I want to kind of talk about what happens if the investor said, James, I want to kind of sell a put, and we're going to kind of mix this up a hair, okay? Now, does the paper money account have any position on Amazon right now? I just want to kind of see what it has. So number one is it has this position. It's a 220, 225 long call vertical. Okay, fine. It's pretty close to 100%. We could even say, could we even take this down? We could, okay? That's the margin account. Just real quick, IRA, anything there? So it looks like shares there. Looks like a put vertical, okay? And you're going to see another put vertical. Actually, it's kind of more of a cash secured put, if you will, okay? Now, for the time's sake, what I'm going to do is I'm going to go back to the margin account for just a second. And what we're going to do is we're going to take this trade a little bit farther out. Let's say we're going to go to November. I can't even believe I'm saying that, okay? What we're going to do in this case is we're going to buy a long call spread, okay? So the one we actually have right now is September. And some people, they don't look. They're not looking at things on a daily basis, okay? They might have other things. Their investing time frame just might be longer, okay? Now, I know you're thinking to yourself, who would do that, okay? We're all different, aren't we? Aren't we all special? Okay, now here's what we're going to do. We're going to do the long call vertical. We're going to do the 235, 240. Now, when I first look at this, what I first look at is I always look at the spread on the call side, the at the money call, and the at the money put. So if I look over here and I see the spread is 5 cents wide, I look here and it's 10 cents wide, then I go look at volume and open interest. And I'm even now assuming that if the spread was that tight, 20 cents or narrower, that there would be option volume and open interest as well. It just so happens that there is. Now, what I'm going to do is I'm going to trade number one. We're going to right click on that, buy. We're going to go to vertical. And what we're going to do is going to go long call vertical, the 235, the 240, 258 debit. Okay, stop for a sec just right there. I want to kind of now compare the Cajole dots and the moving averages, what we see on the price graph, and then compare it to the oscillators. Now, I don't know which oscillators you use, but what we're going to do is let's kind of just look at this in terms of a comparison. Now, if we're getting, let's say, the stock breaking out of resistance, what do you think the MACD would be doing? That's a question. So if the stock breaks out to the upside, do we think the MACD is going to be down? Do we? Do we have an understanding what the MACD is really showing? Momentum? If you break through the ceiling of resistance, wouldn't you expect the MACD would be going up? It's logical. Well, if we pull this up on that breakout day, lo and behold, the MACD goes green. What a shocker. Okay, now here's my point. When the price broke out of resistance, what does the MACD actually tell us that is so different than what the price graph tells you? Not a whole lot, okay? Now, if we looked at, for example, the RSI, and we said, okay, the RSI is neither overbought nor oversold. What does that kind of tell us? Well, now, by the way, that's another question. What happens if the RSI is neither overbought, neither oversold? What do we expect the chart to be showing? If we kind of had to guess what it was showing, we'd probably guess that that stock was channeling a little bit, probably more neutral-ish. Now, if we said, James, the RSI kind of looked like over time a little bit, that the RSI was maybe going up a little bit higher, then we might say, if we kind of said, I can't see the chart yet, we'd probably say that there might be a slight grind on the price to the upside, which is kind of what's happened. But we would know that if we just looked at the price graph and said, are we shooting to the upside where we're way elevated off support, where we could get an overbought or oversold reading? We're nowhere near that, okay? So this is where the RSI, if we look at this on a case-by-case basis, not really that helpful, okay? Because we're pretty close to support still. It's a fresh breakout. We wouldn't expect to be on the overbought yet. Now, if we looked at, for example, like the stochastics full, it's just a basic setting, like a 80-20 overbought, oversold, 10-10 time period, what you're now going to notice is it has in the shorter term, the stochastic line has gone up. But how different is that to, for example, just looking at the price bouncing off support and the price goes up? And there's been two Cajole dots on the chart and the moving averages crossing over and, for example, the green lines on the moving averages. What's your point? My point is we're just looking for confirmation of confirmation of confirmation of confirmation, and it's already on the price graph. You get it? So why as people and investors, why do we just keep wanting more and more and more and more information? Because we went to college, we went to high school, and we were buried with assignments and papers and the whole 9 yards of just more and more and more of the same. Now, shocker, you actually don't need that in investing. I mean, this is not college, okay? We don't need confirmation of confirmation of confirmation. You could just trade what was on the price graph. And the oscillators are just more of the confirmation of what you're seeing on the price graph. Now, I want to kind of now pull this up. So that's the first major point. If someone talked to me about the differences between trading the whole moving averages, the 1, 2, 3 method, or Cajole dots versus, let's say, trading the MACD, it would be interesting, which they never point this out, show me statistical differences in trading results, even back testing, on doing the oscillator compared to trading the whole moving averages. Is there any statistical differences? Is there any one that is superior over time on different stocks in different time periods? They never address that, okay? So I think that's interesting to point out here, okay? Because what I want to really get at is to the bedrock of kind of principles which are timeless and practices which are timely, and kind of doing those same things over and over and over again, and not going down a 20-year path of looking for the best indicator out there on YouTube. Now, my point in saying this is it's really the investor over the oscillator. Let me repeat what I just said. It's really the investor that is being consistent to the rule set over the oscillator. Okay? Now, when I realized that one day, I kind of was like, wow, you could take 10 different indicators. It's not the indicator. The investor, it's really up to the investor to trade what they see. How consistent can the investor be? Now, James, I hate this responsibility talk. Grown man, grown woman here talk, right? Come to James' meeting, okay? So what we're going to do is we're going to hold ourselves responsible, and you might be thinking, well, how do we find examples? I mean, that's the golden question. How do you find them? Well, the one thing that we've pointed out for a couple times in a row is the 10HC column, the 20HC column. Now, I want to point this out because it was asked a question about it, okay? James, wonder if I like to use different moving averages. I don't like to use what you have. That's fine, okay? Now, what you're now going to notice is if I pull this out, now this is, we say, and this is kind of that routine. On a routine basis, we're looking at indexes daily. We're looking at sectors daily, okay? And we're looking at the Dow 30, S&P 100, NASDAQ 100. Now, when you combine the Dow, the NASDAQ, and the S&P 100, it's about 195 stocks because some overlap over different indexes, okay? Another meaning they're trading, the NASDAQ stock could be trading on the S&P 100, okay, and so on. Now, what I want to do is, how does someone really find something that is maybe just having brand new green moving average lines? Well, that's kind of what those two columns are doing, okay? Now, someone might say, well, how can I actually find, let's say, something that is a brand new crossover? Well, that's what that's really trying to find. And this is very important because if someone actually says, I actually don't look at each stock daily, this is actually a way to do it by just looking at the list, okay? Now, if we came down to something else that is also showing brand new for today, green lines on the moving averages, and the one in both of those columns are representing that the stock, for example, has the moving average has been green for the 10 and the 20 period moving average for just one day. The crossover with the green background means it's a bullish crossover that's happening today. Now, I want to share these with you, but I also want to kind of get to the next, to one of the questions. So when you right-click on the column heading, do edit formula. Now, if you said, hey, James, I don't like, let's say, the whole moving averages. You could type in, let's say, this simple moving average, exponential moving average, weighted moving average, whatever you want there. You could take that out. It'll give you a prompt as you start typing. And if you said, I don't like the 10-period moving average, I like the 5. Well, then take the 10 out and put the 5. Now, let me kind of show you something. If you said, James, I like to just use a simple moving average. And then notice, when I typed in simple, you start to get a prompt now, okay? And I can click on that, and now I'm just using a simple. The simple is going to really kind of give more slack to the price, to the moving average, if you will. It's not going to be tracking as closely as a whole moving average, which is more weighted moving average. Now, what I'm going to do is, again, if you want to change this, let's say time period, not 10, change it, okay, to whatever you like. Now, let me share this with you just real quick, and I'll also put this in the description, okay? But there's been some questions on this, and I really want to hammer this home, okay? So what I just sent to you is the script for the 10 period. The script right here, this is for the 20 period. This second script right there, and the last script right there, you can also see that if I click on MAX, click on the formula, share that, and I'm sharing it right now. What I just sent to you in the chat is the 3 columns, 10HC, 20HC, MAX. Now here's what's kind of nice. It's not just stock specific. We can pull up the sectors. We can pull up the indexes. We could pull up things that were not in the US and so on. So it's not just stocks per se. Okay, it could be other products, commodities for crying out loud. Let me kind of show you this just real quick so you can kind of really get a taste of what I'm talking about. So if I pull up the indexes and I said, is there anything today that is actually getting a brand new, I'm talking about fresh, that one, this one, that one, this one, this one, this one. So on the S&P 500, NASDAQ 100, semiconductors, and you're going to see that if we looked at gold, you kind of just feel like dadgummit, okay? Those moving averages, they've been green for 10 to 12 days respectively, okay, on those ones. But this is how you kind of stay in tune on a watch list with what's happening on the chart. Now, does that help you? So now I'll be honest, I like to visually look at them. I look at them every day. Second, if I also said, look, I don't have a ton of time, if I said that, I can look at them on a list. This is how you look at them on a list, okay? Now, what we're not saying, we are not saying if something is 10 or 12 days into the move that it's past due and the trend can't keep trending. Well, that's ludicrous because that's like saying the stock like Lulu can't keep going down. So what's trending could continue to trend up or down. What is actually giving something like a more of a fresh entry setup, it doesn't guarantee that it's going to go up. It's just showing on the chart. Scripts are not guaranteed for accuracy and timing. It's just showing that it's actually hitting their criteria, hence the script. Okay? Now, any questions there? So is this helpful for you to now, the reason why I hit this is I think a lot of times we get really oscillator-itis. Meaning that the oscillators, if I look for more and 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 more information, that maybe that's going to make me feel better. But I think it really comes down to, does the trader have confidence of what's happening on the price graph, and do they understand how the price graph is moving the oscillator? And are you investing looking out the windshield, or are you driving your investing vehicle looking out the rear view mirror or the side mirror? And how is that oscillator any different than what we actually see on the price graph? So we're talking about the scripts on the chart compared to the oscillator. Man, gloves are coming off today, okay? Gloves are coming off. Just having fun. Now, let's kind of go to the next example. Now, what I want to do is I want to also pull up, just real quick, let's go back to this. We're going to send this. Price change a little bit on us there. Confirm send. And now what we're going to do is we see on that trade number one there, that's the trade we talked about. Now we went on a little kind of explaining, okay, of how to do the script and so on. Same trade we saw before. It's really the 235, 240. We're going to go ahead and send that order and we're going to put that on. Now, the one thing we could do is we could frankly take this position off because that's pretty close to done, okay? Since we're on it right here, we're going to try to close that hand and try to grab the potential profits. Now, remember, they are unrealized gains until the order is filled. Always remember that. And just because we sent the order in doesn't mean it should have filled, because it needs to be matched and actually double check that it has liquidity and there is a fill. Okay. Now, Dean actually says, make it rain on the bamboo. Look, it's really true. I myself, I don't know why it took so long. There's just a quick story that what happens, the bamboo nut, right? The bamboo nut is so hard that it takes 5 years of rain every day, okay? 5 years of rain every day for 5 years where the water can break down the nut. Now, what is the bamboo nut in this example? The bamboo nut is our skull, our brain, okay? Now, after that rain, moisture can actually penetrate through the nut, finally, and mine was like 10 years, okay, just being honest. My nut was really hard, okay? The big actually thing is, in 90 days, the bamboo grows 90 feet tall in 90 days, okay? So the question really becomes is, did it take 90 days to grow 90 feet tall, or did it take 5 years and 90 days to grow 90 feet tall? Well, the breakdown of the nut to get to the seed was a part of it. So what we're trying to do here today is kind of take some vice grips and really kind of just get in there a little sooner. Okay. Dean, sorry. Dean brought it up, so we're going to blame Dean on that. Well, I haven't said that in a long time, but it's fair. Now, I want to kind of go back to just real quick O'Reilly's for just a second, okay? Now, let's take a quick look at O'Reilly's, and I just want to look at this price graph, okay? So let's say someone said to me, hey, look at O'Reilly's. Now, last week we talked about these dots, okay? Now, remember, now you can choose to do what you want, but I like to simplify things, okay? Simplify, organize, okay? So when we're looking at these dots, if these dots are getting higher, what does it tell us about trend? What is it telling us? Now, first off, the green dots are showing close above the high of the low day on the chart. Now, if those lines are getting higher, it tells us there's higher lows, some type of uptrend. Now, we could also look at the chart like we did last week and say, are we making higher highs? Now, you'd expect if we're making higher lows, there's been some higher highs somewhere. That might not be true if we're just setting up an ascending triangle. Now, if I look on this right edge and I see that if I go dot to dot, like a third grader or second grader, I don't know what grade, okay, we get higher lows. If we now look at the MACD and make a commentary like, oh, wow, the MACD is going up. Of course it is. You're making higher lows, okay? I don't know why that's groundbreaking. Now, the one thing that we would also say is if we're making higher lows and we're kind of pressuring into the area of resistance, you got to imagine that the sentiment would be pretty high, especially if the price is up near resistance and the price isn't really falling down. What would we expect the RSI to be showing? Oversold? Come on, really? No, we wouldn't think that. We'd be saying, look, if we're making some higher lows and they're getting higher and we're staying very close to resistance, that sentiment is probably holding up. And lo and behold, here it is, okay? But how's that any different than the price graph? That's what the price graph was showing, okay? Now, what you're now going to notice if we went to the stochastics fall, that like the Cajole dots, like here, like there, like there, they're kind of matching what we're seeing on the Cajole dots. Now, if we look down at even the market forecast and say these crossovers, there, and there, they're kind of like making higher lows on the oscillator. How's that any different than just looking at the price graph? Yeah, but James, I like more information. Is it helpful? Okay. Now, what I'm really getting at is I'm not an oscillator hater, but I think sometimes is no one really fully understands, maybe, or we need to maybe teach more of how do you read the price graph consistently. Now, the value of actually looking at this graph or the trend graph is you learn to read it consistently, and it ain't based upon your feelings. The moving average is green or red, and the shading is green or red, okay? And if we went to the trend color candlesticks, which we did last week, you know, it's really just kind of, it gets the investor away from kind of reading the chart based upon their personal perception, which I'm not sure if that's a great idea. Now, the second example I'm going to pull, we talked about O'Reilly's last week. And we said, hey, there's some little Cajole dots on this chart that we could connect these highs. Now, don't get so fanatical, okay? How far should we go back to draw the lines? Look, you can go back as long as you want. He or she that touched the most number of dots in that period of time, that's probably the relevant time frame to look at, okay? But don't miss the point that the line is increasing. And if that diagonal support is increasing, you get higher lows. Now, what I'm going to do is we're going to do a stock trade. And on this stock trade, what we're going to do is we're going to go to the paper money account. Let's go to the IRA, show some love for both accounts here. And we're going to go to O'Reilly. Now, we kind of talked about maybe some of the fundamental backdrop, okay? Why O'Reilly's might be increasing given car prices, interest rate prices, things like that, economy, blah, 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 okay? We talked about that last week, but that's kind of a fundamental tailwind to what might be happening technically, okay? Now, if we take a look at this, we might even move up this line a little bit more closely to the current price level. So in the IRA, what we're going to do is we're going to kind of say, look, could we set a stop underneath kind of that level of C pork? That support is right about 103.22. Okay. Now, Wiley's making a comment. Risk management, position size, patience, discipline, holy grail. Yeah, honestly, it really does kind of come down to if the investor could avoid doing self-inflicted damage to themselves, okay? And that's misposition sizing, over allocating to certain areas where the portfolio is like, man, 75% in one area, just things that wouldn't maybe pass the common sense test, right? So I think that's really kind of the thing we got to get at. You're absolutely right. Now, you hope that over time that you kind of learn to kind of like say, I got to either stop doing those things or I'm going to stop myself, okay? Now, have I done those? I sure have. Okay, you get to the point where I got to do it right. Okay, doesn't guarantee an outcome, but the biggest actually thing is stop the self-inflicted type of trading. Okay, or investing. Now we're going to right click, we're going to buy custom, we're going to go down with stop. Now what I'm going to do is we got 106.23, and then when we take a look at the stop, I'm going to take the 103. Okay, less 2%. Now, if we take a look at this, if we did less 2%, it's going to give us a stop at $100.94. Now, for time's sake, I'm going to kind of leave it right here, and we'll position size this since you're probably looking at that. Let me just tell you how many shares it's going to be. And if we did that, I want to kind of show you some resources that you can grab and give you a homework assignment. This is really going to be about 64 shares of stock, okay? 61 shares, excuse me. Now, what I want you to do as part of your homework, I want you to take whatever your favorite indicator is, your oscillator, and I want you to compare the oscillator to the moving averages that and let me share with you this chart, okay, that does not have those oscillators that we showed here today. And the homework is, I want you to look at your favorite oscillator, one or two of them, and I want you to compare this, the whole moving averages and the Cajole dots compared to your favorite indicator or oscillator. How is it different? Is the timing different? Is it the same? Are you underweighting the price graph? Okay, that's really the point I want to get at here today. So I think the focus sometimes can be more on the oscillator than it is on just reading maybe the number one indicator, the price graph. Okay, now as we kind of close this up, I want to kind of make sure we're aware, and I'll send that. A couple other stocks we're going to keep an eye on. Let's do a fast fire. One of the stocks that's getting a little reversal is IBM. Keep an eye on that. We see also UNH that is kind of at this area of like, can this finally reverse? Can some of this negativity finally reverse itself? This is one we're going to kind of keep an eye on this week. We do not normally bring this up, but could it be at the moment where it could finally reverse? When you look at, let's say, Apple is up at the top of the channel, just like we said before. If we're up near the top of the channel, we're not retreating that much. That probably tells us RSI stochastics is also staying pretty elevated as well. And keep an eye on that. Can that break and try to test higher? The other ones we're going to kind of keep an eye on this week, which if we stay here, this would actually be hitting a breakout as well today, if it can do that. Netflix. This is another stock where it kind of has a potential reversal set up. Keep an eye on that one as well. We would include Micron and include Tesla. Now, in wrapping up, what I want to do is I want to show you something, and I want to show you this right here. There we go. I'm going to show you this right here. So if you said, well, James, where can I actually follow the classes that you guys actually teach on YouTube? Well, what I sent you is the link to this page. If you have not subscribed, simplest thing to do is just subscribe. That way you get all of our content for free, okay, outside ETF classes, which are 2 of them. Second, we also have a playlist for this class, okay? So you can bookmark that and see previous classes that we taught to really, as you enjoy a show, you watch the episodes. the same idea here. And also, if you said, James, what is your X page? There's my X page as well. And I want to give you a quick reminder that Ben and Kevin will be in Washington, D.C. this weekend doing a live event. And so I want to give you a quick reminder, if you don't know about it, if you went to schwab.com and went right to our coaching page, see the chat, that in-person event is coming up, okay, right here, okay, right in Washington, D.C. If you say, well, what are the other events going into this end of the year? Let me post this. It's right there. And we'll actually have some new ones as we come into 2026 as well. So join us, not just for these classes online, but also in-person classes as well. Thanks to all of you for your comments and questions. I want to also say that gave you a specific homework assignment. I want you to go out there and practice that. Look at the whole dots versus and whole moving averages compared to your favorite oscillator. Do you see any material statistical differences? Now, with what we discussed here today, it was done for example illustrative purposes only, okay? And our focus was becoming more comfortable with reading the price graph, and is it the number one indicator? With that said, thank you so much. Take care. Stay tuned for Cameron May coming up next. Bye-bye.